Hey, Nick Harris here. If you're watching this video, congratulations on starting the process to your first or second or many mortgages. Wanted to create this video to share with you the mortgage process because we get a lot of questions. How does it work? What's the next steps? And wanted to share this so you have a reference to go back to throughout the process or even in the beginning, just so you have something to look at more as a visual and a video from a knowledge standpoint. So let's get started. So the first step here, we have pre-approval. That's most likely where we're at right now, where we're running some rough numbers based on the information you submitted on your application and the documents you submitted to me, like your pay stubs, bank statements, stuff like that. From there, what we do is we crunch the numbers and we'll derive or focus on what we can pre-approve you to as a max. But then also we want to focus on what you can afford that fits your monthly budget, because what we usually pre-approve folks to more than they want to spend each month. And so our goal really is to find that sweet spot that you're comfortable with on a month-to-month basis. So we'll come with usually two numbers, one being the most that you can qualify for, in essence, the max pre-approval limit. And then two, we'll come up with what the sales price would need to be to keep you in your monthly payment range. So that would be what the pre-approval process is. Once you submit your documentation and application, it usually takes 1 to 2 business days or less, sometimes same day, depending on how complex your scenario is, to crank that out for you. Once we have that done, we move into the second step here, step 2, which would be going out looking at homes, finding that perfect property. When you're ready to submit an offer, we'll create a pre-approval specific to the offer that you're going to be putting in. So we try to match what the purchase price is with what your, what your pre-approval amount is with the offer that you're going to put in. So it looks like, we're pushing the limits to give you a little bit of negotiating power so they don't come back and counter a higher number because they know you can afford more. So it's a little bit of a mind game, but some of us like to use that, some of us don't, but know that that's what we try to do. And if we want to change that, certainly can. So once your offer is accepted, then that's when we do start the physical loan process, which here would be your offer accepted. And then we move to your initial disclosures. And the initial disclosures is, in essence, your rough draft of all the loan documents that gives us authorization to start your loan processing. So that's where we start getting your loan in the system, and we move down the chain, which will go to step 3. But know that the initial set of disclosures, they're all rough estimates based on what we do know at the time. So we don't always know what all the fees are at that time. We don't know what the property taxes are sometimes. So we try to make our best guess. And then as we progress through the transaction, we make those updates accordingly as the numbers start to come in. And you'll see those updates as they start to come through. You'll start to see that hit your inbox with updated documents. So once those are signed, usually we try to get those out in 24 hours and signed and come back so we can start processing your loan. We move into the step 3, which would be appraisal and processing. So the appraisal we would order, again, does a value analysis on your home to make sure you're not paying over market value for your home. And then processing, we're working with our underwriting team to get your loan ready to go to them. So we're doing some verifications of employment, making sure we have the correct documents needed to get your loan to underwriting. There may or may not be some things that we need at that point, but if we do, we'll reach out to you. Usually it's pretty minor things because we do a pretty thorough job up front of collecting everything we need. So once we're done with that, we move to step 4, which would be our underwriting and loan approval step, where once we have that full package, we'll send everything to our underwriter and the underwriter will review it. Usually we'll make what's called a conditional approval. And at that point, what they're looking at is, they're issuing approval based on, say, 1, 2, 3 conditions. And that could be like stuff like, can you get us an updated pay stub, the most recent bank statement, or maybe a clarification on what this large deposit was, stuff like that. Usually pretty minor, more administrative things. And we'll reach out to you to get those from you if anything's needed. Once we submit everything back to them, we'll get the full loan approval. And at that point, we will start moving down into the closing process, which will take us to step 5 here. And that would be the closing disclosure. So once we have all of your final documents in, we'll send everything to our closing team, which will prepare your closing disclosure, which is, in essence, your final estimate. So we start off with their initial estimate up front, and then as we get closer to the closing, we issue what's called the closing disclosure, or AKA a CD. And the CD is a time-sensitive document that once you sign it, we can close no sooner than 3 business days later. So once that's signed, 3 days later, we're able to close your transaction. So it is important to get that document out as early as possible and get it signed so we can get closer to closing the loan for you. So at that time, the closing disclosure will have pretty much all the final numbers. If we've made any updates or anything like that, you'll see it on that document. It's not the end all be all document, so if there's some things that need to be corrected as we move into closing, know that it's not set in stone at that point, but they should be like 95-ish% accurate at that point. So once that's signed, we move into the final doc signing, which happens with closing and our escrow partners that we work with. And so we'll coordinate with them to send them all the final documents. So it'll almost be identical, minus the changes and updates to the initial documents you signed at the very beginning. This will be the final set, the set that is set in stone, the ones that do matter. So we want to make sure that we're dotting our I's and crossing our T's and making sure everything is accurate on those documents. And if it isn't, we can get it corrected, and it's very seldom they aren't correct, but it happens. We're human. And if it does happen, we'll get it corrected ASAP, and we'll move into the closings, the final signing. Once your documents are signed, we then will get the information to you to wire your final funds for closing. And then once escrow receives the final funds for closing, they'll release your file to the county to be recorded. And once the county receives it and stamps it as recorded, we are done. So I know it sounds like a lot, but it really is something that moves very fast. We usually are getting things done between 21 and 30 days. So things will move quickly, and we're here to make sure it's a seamless and stress-free process as much as possible. So along the way, if you have questions that come up, please don't hesitate to reach out to me. I'm here to help however I can, and we're hoping that you will trust us in your home buying experience. Thank you for listening to this video, and we will talk to you soon.